So first place I want to start out here is Google Trends. This goes all the way back since the beginning of Google Trends and tracking Google search data around a specific search term, how to buy stocks. Okay. Now, this specific search term went the highest we've ever seen in the second half of 2020 into the beginning of 2021. And it went there because everybody was kind of forced to be home. People had a lot of extra money around. There was stimulus. There was all that stuff going on, right? And so a lot of people wanted to try out the stock market at the end of 2020 and certainly the beginning of 2021. So a lot of people were getting involved in all those sorts of things, right? Now, we know that, right? And we've never seen that level of people wanting to get in the stock market really ever in history. It was crazier than the tech bubble, actually, much crazier than the tech bubble in terms of how many people wanted to get in regards to the market, right? From basically the second half of 2020 through the beginning of 2021. Now, what happened after that was no one wants to get in the stock market event, essentially, okay? All the way back in December, even with every growth stock in the world given to you for, pennies on the dollar, all of a sudden no one wants to even bother about like how to research stocks, how to buy stocks, how to get in the market, anything like that, right? And the reason this happened, in my opinion, actually is not as much around, it is part to do with people being scared, concerned, maybe people that had been in the market got, thrown out of the market, those sorts of things, right? But it actually has much more to do with the next chart I'm about to show you. And this is what matters more than anything, okay? And this explains why we had 2020 and why we had 2021 and why we're at where we're at in 2023. The chart I'm showing you right now. This is what we call real wages, okay? And if you really want to know how the average person's doing out there, always look to real wages. Real wages will tell you more than any other indicator, in my personal opinion, you could possibly look at from the macroeconomic landscape. Now, we had an interesting phenomenon that happened for about a 5+ year time frame, okay? From basically 2015 through about, until Rona, essentially, we had real wages absolutely skyrocket in the United States of America that we hadn't seen in a long, long time, right? Coming out of the Great Recession, we certainly had real wages start to catch up a little bit, but it was slow because companies weren't needing to pay workers much at that particular time, right? By the time you get to 2015, unemployment rate was starting to get pretty dang low, and finally companies had to start paying up. Now, we also had simultaneously inflation, which inflation plays a huge part in real wages, right? If workers in general are getting a 5% wage bump, but inflation is 10%, real wages are going down, okay? And so that's why real wages matter so significantly. Now, the problem is, in 2020, 2021, people had been through real wages bump in a huge, massive way, right? Real estate prices had obviously skyrocketed, and there was a lot of excess money around, right? And so a lot of people, when they have excess money around, they're like, what do I do with all this extra money? Oh, let me invest it. Oh, how do I buy Bitcoin? How do I buy stocks? Like, how do I do these sorts of things, right? If you have no extra money, you don't care about the stock market. You don't care about Bitcoin. You don't care about buying real estate. You don't care about any of that because you got, barely enough money to get your groceries or whatever, right? So we had real wages go down and down and down and down for a long time. Now, very recently, real wages have started to tick up a little bit, but keep in mind, it's a little bit, not a lot. I mean, like so minimal that you can barely even feel the effects of that, okay? So the bottom line is, when you see this term go down, you've got to understand it's really gone down not just because of people being fearful or anything like that. It's gone down because the average person's been hurt so bad financially really the past few years, despite the employment picture being about as good as you can get with unemployment in the threes. Everything's gone up so much. Their wages just haven't been able to keep up with that, right? I take you back to when I used to work at Quick Trip, right? When I used to work at Quick Trip, I was making, $50K a year, whatever. And I've always kept my expenses lower than my income. So I was always in a position to buy stocks every single month, if not every single 2 weeks. Always. Even back when I worked at Walgreens and working minimum wage jobs, always had more income than expenses, right? So I was always in a position to buy stocks. And the problem is, in 2020, we had so many people that had benefited from real wages going up in such a significant manner for years, And then you add on crazy amounts of stimulus and crazy amounts of time on their hands, and everybody and their grandma wanted to get in the market, right? Now, in Fubo's last quarter, right, the company basically, here's the deal. They raised their full year 2023 guidance for North America, and that was way before any of this Charter Spectrum situation happened. They reduced their net loss by $41 million. They achieved 7% gross margins, which is, they got a long way to climb there. They posted record average revenue per user, right? Now, this was for the quarter ended June 30th, 2023. So this current quarter we're in right now is July, August, September, right? So we're going to get all these new customer data numbers in the next quarter, in the November quarter, right? Well, it's going to be announced in November because this one was announced August 4th. So my guess is this quarter will be announced at some point in November, unless they pre-announce, like, let's say there's some situation going on where their customer account is hitting such ridiculous numbers, it's so far exceeding guidance that they might pre-announce. But if they don't pre-announce numbers, then we'll hear these numbers come out in November. And my gosh, are they going to be pretty extraordinary? Because even last quarter, which was like a sleepy quarter, Fubo exceeded North American guidance. They achieved $305 million in revenue. It was up 41% year over year, and 1.16 million paid subscribers, which was up 23% year over year. And that was with their ad business being actually really weak in that quarter, which I'm expecting that to pick up considerably over this next several quarters, okay? So, now we're just talking about this is like a cherry on top situation. Now, here's where the company's gone over the last few years. Remember I told you about the company just executing better and better? This company's gone from $4 million of revenue in 2019, $4 million, to then $218 million in 2020. $638 million of revenue in 2021. They cracked $1 billion in revenue last year. And this year, they should be somewhere between 1.3 on the low end and $1.4 billion of revenue on the high end, okay? That's big. That's big, okay? Are they going to crack $2 billion in 2024? We'll see. But look at the pace this company's scaling at, and you're not going to find... I don't know if you'll find any other company in the world, honestly, scaling this quickly to $1 billion plus and potentially $2 billion plus in revenue. I don't know of another company that's basically gone from no revenue to $1 billion, $2 billion in a matter of 5-6 years. That's insane, purely insane. But that leads us to the bottom line and what's going on with the bottom line, because it's like, okay, it's one thing if you can have all these new customers, you're attracting all this revenue, things like that, but what's going on with your bottom line? Well, things are getting in a much better place. Here's Fubo's net loss over time, right? Obviously, back in 2020, that was just extraordinary losses. But here we have a situation where the losses are getting cut down and cut down and cut down and cut down in regards to Fubo, right? This is a very promising trend. This is a type of trend you want to see. I mean, if we look at last quarter, that's the best quarter they've had in terms of their bottom line in a long time. So the company's clearly headed in the right direction, not just with top line revenue, but with the bottom line and getting that in a healthy place as well.